So our philosophy is based on three pillars. One is that we are everywhere. So our fund maintains the global diversified asset allocation. So we have 60% in global equities, 28% in global fixed income, and 12% in alternatives. And we are everywhere. It's not just we can go everywhere, we maintain the global diversification at all times. The second feature of our fund is that we are active all the way through. So we have active tactical asset allocation, but also we have active security selection, and most of our alpha excess return actually comes from security selection. The third pillar of our philosophy for the fund is that the fund is transparent, liquid, and we make sure that advisors can understand what we are doing in our fund so they can explain it to their clients. So on total return, the main factor that contributes to the performance of the fund is the strategic asset allocation. So how much we allocate to equities and bonds over the long term. On an excess return basis or alpha, the main driver of alpha is the excess return from security selection. So that's about 2/3 of our alpha over time. And the second element is our tactical asset allocation and structural asset allocation. So structural asset allocation would be positions that we maintain relative to the benchmark. So for example, investing in high yield or emerging market debt over time, that's a source of return over the long term. And tactical asset allocation is the underweights and overweights to asset classes based on our tactical views over an horizon of 6 to 18 months. We have ongoing research in our multi-asset division. We have more than 60 investment professionals in our multi-asset division, and we constantly look for new asset classes to add to our portfolios. The criteria is that a new asset class needs to add value to our portfolios. So either it's a good diversifier, it has low correlation with other asset classes within the portfolio, or it's a way to enhance returns. And ways to enhance returns are either the exposure to the asset class can have another source of return to add to the portfolio, or we think at Rowe Price that we can add value through active management in this asset class. So currently we are happy with the range of asset classes we have in our multi-asset portfolios, but we are constantly looking for new asset classes to add, and if it makes sense, we'll add them. So political instability can impact equity and bond markets, they could impact the performance of our funds, but I would say that first, the way we mitigate the impact of any local political issue is that we maintain global diversification. We have active asset allocation, so hopefully we'll avoid the places which are the most troublesome. And also I would say that political instability sometimes is overestimated in terms of its impact on financial markets. Over the long term, financial markets are mainly driven by fundamentals, so valuations and macroeconomy. Political instability is sometimes more about the noise and the sentiment over the short term. So the best ways to sometimes overcome political instability is maintain global diversification, maintain active management, and take a long-term view and not get distracted by short-term noise.